Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, July 16th, 2020. I am Frank Ochoa, aka PivotBoss. First of all, I do want to say thank you all for joining me yesterday for our Traders Exclusive webinar event. Got great feedback for that webinar, and I will be pointing you to the link here pretty soon, so be looking out for a message about where you can find that link to watch the recording. But thank you all very much for supporting the PB community, and looking forward to seeing you again. Here's a look here at the ES and the daily time frame here, and one thing you'll notice here is right on topic, as we talked about yesterday in that webinar event. We are seeing a push through the previous session's low here, and any late sellers here are becoming trapped. There's been a 3-point reversal down off of those lows at the 3, 4, 5 a.m. time frame here in the intraday charts, and right now being back above those lows here suggests that we could begin to work our way higher, and perhaps on the bullish end of this day could become a bullish outside day, even if it's just briefly taking out the high. So taking out both sides of the range here today could be in play if the ES can continue to stay above those 3192s. So right now we are right at the top end of this key range here, and as we've talked about before, this is a spot that's very, very important, because if we do break through it, we have upside targets that can easily be reached down the road. I keep talking about those targets, the 3385s here and also the 3538s. Those are major upside targets that could be reached, and it all comes about by breaking through this key range high here and seeing that move up to those targets. This is also a spot though where if price were to push through these highs and just it can't really get going, then there could be some sort of trap that could reverse price back towards 77.5. Right now this market's been fairly bullish, and again, if we can see that move through those highs, we may see a push and a continuation higher. So continue to watch today's low. Right now there's bearish participants trapped down below those lows, and again, if price stays above 3192s, we could see a continuation and a squeeze back toward the previous session's high. If we take a look at the NQ, you'll see that this is even more significant in terms of a failed low. The previous session here, we have a great trend going on, by the way, and the previous session here had a pullback right into the ideal entry trigger zone here, which is right around that midpoint from the previous rejection day mid, right? That zone right there is 525 up to about 550. Yesterday's low was 51s. Today we've seen price take out the previous session's low, hit the midpoint from the rejection day, and so far there's been a lower low failure here of prices below 500, and prices are popping back above or attempting to stay above those 51s. Yesterday's low is right at 51.25, and we're right at it. Again, if price can reject these lows, if late participants are trapped below here, this could lead to a pullback toward the previous session's close, and perhaps briefly become a bullish outside day into about 10,800. So again, this could be the beginning of what triggers a continuation higher here, especially if price begins to go through 800s. So right now, this is the early trap idea here. If there's a failure to hold 550 by the rest of the day, then perhaps this becomes a failure that could flush much lower. But right now the battle's being had right here between 525 and 550, and if bears become trapped down here, we could see that squeeze back toward the previous session's close, previous session's high, and perhaps test that 10,800 level. All right, let's take a look now at crude oil. You'll see crude oil here has been developing within this very narrow range. We had this pulled up to a 10-period narrow range yesterday, and you saw how narrow that range was on a 10-period basis. Let's bring that up right here. There's 10 right there, and you'll see again that the range has become super compressed here on a 10-period basis. That's a 2-week narrow range. And again, markets don't just fall asleep like that forever for a couple of weeks. What it's doing is building that energy for the next move. And whether that next move is to the upside or to the downside can still be in the air, because compression doesn't really give directional bias. It just tells you the energy's there. But right now we've been trending up. We've continued to trend higher. We're still holding above 40 again. The pullback to the higher value relationship on the pivot range continues to be defended. So the directional bias remains to the upside. And right now, if price can push through 41s it opens up at least a push toward 43, perhaps as high as 44s to retest the 200-day. So again, very, very clear buildup of energy within this narrow 10-day range. If price can start to push higher here, we could really see a couple of very strong days that can get us right to those 44s very quickly. Again, 41's been massive resistance. We'll see if price can get through those levels. All right, let's take a look lastly here at gold futures. This one's down about 0.5% right now. And you can see, again, another narrow range that's developed up here. Today's range is still developing, so let's call it 1, 2, 3, 4, 5, 6 days here. And if we bring this down to a 6-day range, we can quantify that right now. 1, 2, 3, 4. Let's make that 6. And what you'll see right here, again, very, very compressed, 64% of ADR. And again, that means that we are due for perhaps a breakout here pretty soon. So it's already a compression range here, perhaps this one here as well. And if it can get going to the upside here, out of this PIMA trigger zone, it could really open up some more upside, right? What we don't want to see here, at least for gold bulls, is for this range that is formed above 1800 to fail, because if it fails through 1800, it runs the downside stops, and now we could be looking at a retest back toward 1760. That could still provide a buy opportunity, right? Because the trend remains bullish overall. But right now this thing is building some energy and eventually could begin to see a climb toward the 1830, 1860 zone and perhaps even beyond. So right now the trend remains clearly intact. The PIMA trigger zone continues to be defended, and we'll see here if this market can start pushing through 1820 at some point soon. All right, that is it for now. Again, thank you very much for joining me yesterday for the webinar event. Looking forward to seeing you in the trading room soon. Take care, trade well, and I'll see you in the room.